Wide diversification is only required when investors do not understand what they are doing. Warren Buffett. For those of you out there who are either long-time or short-time listeners to our program, a lot of folks think, hey, I got to understand a million things. Stock charting is just one of them. I would argue to you, no, you don't. You don't need to be a jack of all trades. You need to be a master of one. And the one trade I would argue you need to be a master of is stock charting, because if you can just follow with us on a daily basis, 10 to 15 minutes, the S&P 500, the NASDAQ 100, 20-year bonds, and gold, you have enough to build a fortune. A fortune worth whatever you want it to be worth, depending on how much you are able to garner as you learn to do this, become expert at it, and then spend your time doing it. You may want a comfortable living. You may want to be a multi-millionaire or billionaire. Depending on the timeline you have, the skill set you build, you can do anything. I am absolutely convinced of it. So, what do we encourage you to do here? First, we're not a stock calling service. We're an education firm. We want you to practice with us, learn how to chart stocks, how to chart ETFs. I have people write me all the time, can I do cryptocurrencies? Can I do Bitcoin? Can I do, you name it, Forex, whatever it is. If it is chartable, yes, you can use what we teach. But you've got to have something that moves, and you've got to have something that is chartable. There are things people ask me to look at, and the range is so tiny. It goes up and down 25 cents over a year. That's not worth. There's not enough volatility there for you to do anything with. But when you start looking at ETFs, and again, I just encourage you to keep it simple. Why do you have to get more complicated than what we do? Why? There's plenty of money. There's millions that can be made here, okay? So stay with us 10 to 15 minutes every single day. We've got an intensive training course I'm going to be putting out in the very near future. It's going to be Charting Wealth Academy, and it is going to be a multi-month hardcore training course for people that really, really want to get into this, learn about options, learn about how to do just about anything you can think of. And working on that now, we'll keep you posted. We're going to have a very limited student body that is allowed in it. Don't know if I'll ever do it again, but I'm going to do it this one time for the people that we select. We'll keep you posted as we move forward. Now, let's jump into the markets. And again, one of these told you so. Okay, let's first look at where we are on our weekly chart as we always start. And again, what are we doing? We are waiting to see if there's going to be a weekly vertical crossover. And I said, don't jump into a down move yet. Yes, we've had 2 weeks of some down movement, but haven't had a weekly vertical crossover. And if you remember, yesterday, first day of the week, on Monday, we had a red down candle getting close to crossing over. I told you we don't call a crossover until it happens, and then boom, guess what happens today? S&P 500 up 0.89%, and the candle went from red to green. Now, does that mean it's going to go up the rest of the week? No, it doesn't. But it means that, you don't call it until you have the vertical crossover, and you don't call any candle until it closes. The weekly candle does not close until Friday, so we do not call it until Friday. Maybe it'll be crossing over, going down. We'll have a weekly vertical crossover. If we do, how long do weekly vertical crossovers typically go? I don't know. Let's look back. When we saw it cross over in June of last year, it went up for many months. We saw it cross over going down in October of last year. It went down many months. When we saw it cross over going up in January, it went up many months. So again, tends to be a strong enough move that we can follow it for a long period of time. Now, does it get quirky at times and not work? It does, but you got to go back quite a ways to see that. You can see back in time, if we go back to 2017, one false start, but the rest of the times, again, but for one period over the last few years, you see that things are quite easily chartable if you follow the weekly vertical crossover. That's why we go back in time. We look back and see what works. Folks, that's what this is about. It's not rocket science. It's not magic. It's not tricks. It's not sleight of hand. It is work every day, 10 to 15 minutes, making sure you understand where the trends are. So, first rule, you got to have a weekly vertical crossover in the direction you want to trade, up or down. Remember, we can also jump into trades going down. We have inverse ETFs that move in the opposite direction. SH goes up when SPY goes down. Take our training. You can find it at the website. Inverse funds, how to make money when markets crash. Inverse ETFs, how to make money when markets crash. I'll also attach that at the end in our video links. I want you to have that knowledge. So, what do we see happening? Derivative oscillators continuing to lose momentum. Price percent oscillator is heading down, but with an up day, it's not as close to crossing over as it was. Could still do that by the end of the week. What do we see this latest 2-day candle? Well, this represents all of the movement on Friday, on Monday and Tuesday. It's a red spinning top, means indecision tending down. Price percent oscillator still going down, not at the same angle it had been earlier. Derivative oscillators lost some downward momentum, really sliding sideways on that 2-day chart is what we see. Go to the 4-hour chart and you see up in the morning, up a little more in the afternoon. Derivative oscillator still losing momentum. Price percent oscillator, however, is heading up. Again, we're waiting for SPY to sort itself out, one way or the other. Weekly's up, 2 days down. One of those is going to change in the direction of the other. When it does, that will set us up for what our next moves are. Markets are still in flux. We go to QQQ. Now, QQQ was up 1.04%, still close to crossing over going down. Can't call that until Friday. Still a red down candle, even though it was up more than the S&P 500. It has more downward momentum. We do pay close attention that the actual down movement has not pushed on that bottom wick further than it did on the prior wick. And again, going into, well, 2.5 weeks or so of down movement, derivative oscillator has gone negative. Price percent oscillator has not crossed over during the course of this week. What do we see on the 2-day chart? Another red down candle, but again, you can see the sideways slide going on really for about 4 weeks now on the Qs. Derivative oscillators losing downward momentum, but that price percent oscillator still heading down. We go to the 4-hour chart. What do we see there? Up some in the morning, again in the afternoon, but the derivative oscillator is gaining downward momentum. That price percent oscillator, however, on the 4-day chart did cross over at the end of the day going up. Price is still below that 2-day trend line, however. We'll continue to keep our eye on things and see how the Qs and how the S&P 500 sort out by the end of the week. That's going to be the real tell for us, unless, of course, we have an earlier change of the 2-day chart. So we go from stocks to bonds, and we see bonds down for the day a little bit, 0.16%. We see that the candles are about flat so far this week, even though it's a green candle. It's topping out right where the prior weeks did. And we see that same sideways slide showing in the price percent oscillator. Derivative oscillators gain a little bit of upward momentum. Prices just above that 2-day trend line. Go to the 2-day chart from the weekly, and we see that red spinning top where price is sitting right there on the 2-day trend line, showing some significant weakness. Price percent oscillators headed down. Derivative oscillators losing upward momentum. And again, remember, 2-day chart is up. The weekly chart is up. So what have we been waiting for? Well, that pullback that is underway right now in the 4-hour chart, if it rotates back around, crosses over going up before the 2-day chart crosses over going down, then of course we would have a jumping in point. We'd have that pullback we were waiting for on the 4-hour chart and a more safe jumping in point for continued up movement. So we'll see if we have a couple of up days on TLT. Might give us a jumping in point on the 4-hour chart. Put that in your notes. Be ready for that. Be sure to check out TLT tomorrow around noon and see how that 4-hour chart is doing. You might have a jumping in point for a practice trade. Lastly, We go to gold. Gold down 0.23% for the day. Now again, remember we had our weekly vertical crossover in gold back on the week ending the 29th of March. And since then, we have had several down weeks, otherwise sideways slides. Our jumping in point on gold somewhere, and again, it's hard to use Heikin Ashi candlesticks. They show average pace, not your high open, low close. You want to know more about Heikin Ashi candlesticks? Join the other 120-something thousand people that have taken that training. You can find it at the website or at our YouTube channel. If you go to the YouTube channel, be sure to subscribe. You'll get all the latest trainings and stuff we post there. But of course, we also post everything at chartingwealth.com, and be sure to be a subscriber to our daily review. That comes via email. We're again having an email issue, but that should be resolved shortly. Please, nonetheless, sign up for that email. That's where you get all the training first off. And again, we've put out a bunch of trainings lately. Now, we see that the jumping in point somewhere around 123 plumbed all the way down to what, 119.54. What did we see the low over the course of the day? Well, so far this week, 119.83. And it looks like things closed at 120.36 so far. Down candle for the week. Derivative oscillators losing downward momentum, but that price percent oscillator is still heading up. The reason the oscillator on the derivative oscillator is losing downward momentum is because we had that up week back on the week ending the 17th of May. That was sort of a green spinning top, but that upward momentum is what's caused that derivative oscillator to spin up like that. Our main indicator, the price percent oscillator, of course, is still heading down. We go from the weekly to the 2-day. 2-day hasn't crossed over yet, even though it's a nice big down candle. We're waiting to see if there's going to be enough momentum to cross over going down. If and when that happens, of course, that would open things up to a potential jumping in point for a downward move in gold. Derivative oscillator still positive, but that price percent oscillator is getting closer. We'll see what happens. We see on our 4-hour chart down movement in the morning, followed by a little bit of a pullback in the afternoon, but still ended the day down 0.23%. And we'll keep our eye on things and see just what we get out of gold, if it's going to continue to move down and give us another jumping in point for a downward play. Folks, that is where we are as we end the day on Tuesday. Get ready to go into Wednesday. Now, don't forget, what do we ask you to do on Wednesdays? We ask you to, after you follow the charts and all, stop for a minute, take your breath, and check out what you get from those weekly charts. Just where are things going on the weekly? Remember, big money is made in big waves. And the bigger the wave, the bigger the money. We are not day traders. We're not trading for pennies, okay, or for nickels. We want to trade for dollars, and we want to capture as much of the move as we can as we trend follow. We're not asking to catch the very top or the very bottom. We want to make sure that we get in safely and get that nice, juicy, ripe chunk in the middle. Dollars, not pennies. Tens of hundreds of dollars, not a few bucks. That's what we want to do when we virtually trade. And again, we're not a stock calling service. We're an education firm. We don't charge for this training that we do here every day on these daily reviews and our comprehensive review and forecast. If you appreciate what we do, and I think what we do is unique, the information we give you is the inside skinny on stuff that works. And if you think it's worth something, you know, my time is valuable. The amount of money that I pour into the channel and into all these things cost a lot of money. You want to help us? Buy our book first thing. And you can find a link in the show notes. You can find it at YouTube, wherever you are. Go to chartingwealth.com. You'll see a link, buy the book. If you're overseas, email me, cw@chartingwealth.com. I'll send you a PayPal invoice. For some reason, Square doesn't allow you to use an overseas credit card. I don't know why. I'm working on that. But email us, cw@chartingwealth.com. I'll send you an invoice. Pay that. We'll ship your book anywhere in the world. Mail is delivered. We're happy to get that out to our friends in Asia, Africa, Europe, you name it. We'll get it. South America, Central America, Canada, you name it, we'll get it out to you. Also, if you want to be a Patreon supporter, we've got bunches of people that have just signed up as Patreon supporters, and over the next day, I'm going to be getting out to you all of your special gifts. That includes your short chart training, your Bitcoin training, your quarterly chart training, and soliciting from you questions for our next live call-in question and answer session where you get to call in, spend time with me on the phone, talking about stuff that's most important to you, and also soliciting from our Patreon members what it is, the ETFs and stocks they want me to review for them, prepare a special video, and get it out to everyone. We do that too. If you enter that second level of Patreon support, the intermediate level, you get a phone call from me once a month, 15 minutes. Usually it ends up being 20, 25, 30 because I enjoy talking to you guys. But that's also another way you can participate and support us at the channel. My friends, love being with you every day. Love sharing this information. It motivates me to know because I get your emails and I see what you post at YouTube and how excited you guys are and how much it is teaching you, how excited you are about your futures and your ability for the first time, many of you, to understand what the hell is really going on. And it is an eye-opener. This is a magic world that most people never give you the lowdown on. And in fact, you guys have heard me rant on it. Most people don't want you. The people in the financial media, the people on Wall Street, the folks who run the ETFs and the hedge funds, they don't want you to know how this works. Why? Because they make money off your ignorance. I would argue, and I see examples of it day in and day out. So don't be ignorant. Ignorant doesn't mean you're stupid. Ignorant means you don't have knowledge. Stupid people can't learn. Ignorant people can. So solve the problem. If you're ignorant, if you're stupid, I can't help you. God bless, my friends. And you aren't. You guys are learning everything. In fact, so many sharp students. Appreciate and love you all. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.